Good morning, traders. It is Wednesday, October 1st, 2014, 8:02 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Quick look at the overnight news stream. The key element overnight is the September manufacturing PMI. Looks like Italy, Sweden, and Netherlands beat the Eurozone. However, the Eurozone, Germany, and the UK, as well as Norway and Switzerland all missed. The German manufacturing PMI indicates economic contraction for the first time in 5 quarters. However, at the same time, Germany managed to sell 10-year debt, which is the Bund, at below 1% for the first time in recorded history. So this caused a very, very strong pop in the Bund, which I'll show you in a minute. Very important. Also, Greek assets surges. Reports suggest that the ECB will drop quality requirements for their ABS purchase program to make junk-rated debt eligible for purchase. Draghi's been pushing the ECB to buy these low-rated assets using the ABS purchase program, and it looks like they're going to push through. The S&P says UK banks' capitalization was well short of for positive ratings. China's September PMI manufacturing small beat, 51.1 versus 51 even. Yen continued to weaken in Asia, new multi-year highs for US dollar versus the Japanese yen, briefly breaking 110 for the first time. Hong Kong protesters continued for a 5th day. Reports protests spread to a new area of the city. There are still no signs of police using force to clear the streets for today's China National Day holiday, which was rumored yesterday. It was rumored that they will start using force for this I believe it's a 2-day holiday today and tomorrow in China. The Ukraine government says a ceasefire is starting to fray. Back here in the U.S., U.S. ADP came in at 213,000 versus 205,000. And there's a report of a second Ebola case in Dallas. Simultaneously, there was a small pop on the treasuries when that came out, but there was no reaction from the treasuries when the first case in Dallas was announced. And then finally, BlackRock, the BlackRock Aggregate Bond ETF gained over $700 million of inflows after Bill Gross left PIMCO. That's an interesting story to watch because PIMCO was holding a very large amount of pensions, various pensions. So that money is looking for other homes, and it looks like BlackRock is a beneficiary. Today, looking ahead for as far as numbers, at 8:45 Central, we have U.S. manufacturing PMI final, expecting 57.9. At 9 o'clock Central, we have ISM manufacturing expecting 58. And at 9 o'clock, we also expect ISM prices paid at 57. Construction spending at 0.5 also at the same time. So at 9 o'clock, we have ISM manufacturing, prices paid, and construction spending all at the same time. At 9:30, we have crude oil inventories expecting 1.5 million barrels on crude, negative 600,000 on gasoline, 0 on distillates. Looks like that's pretty much it for today. I don't see any major speed Test. It appears I lost audio there for a second. I apologize for that. Not sure what happened there. Let's go over that again. Yesterday, the expectation based on the prior day's trader bite, or yesterday's trader bite, the expectation was for responsive selling into 62.75 and or 62.50 right here. That's the key LVN from below at 62.50. The market gave us a quick pop over Monday's high by 2 ticks, and then it immediately rolled over and got to the target, the primary target, 62.75, and then we had a nice rotation up, pushed through to new highs. 76.50 would have been the next target, 83.25, and then or 76.50, 80 even, 83.25, and then 87.50, which is a lot of range for the day. But it essentially got to 78.25, rolled over, and pushed down into the gap zone. Remember this gap zone from way back before it found support. It sold off again on the close. Nice pullback to the mid and the OS low, and it sold off on the close on month-end outflows. The target, once it broke lower, the target below was this 59.5 area, which is a composite high volume area. It's been carrying over from a while back, but we also traded heavily here on Tuesday or Monday and created a small HVN. So that was the next target below at 59.50, and it ended up hitting that on the Globex session on the reopen. So it accomplished that target below as well. Yesterday was a neutral day, was a normal neutral day rather than a neutral extreme. Did not see much force. Once it broke the IB low after breaking the IB high, did not see much force. The expectation was it would close somewhere in the near the middle. Ended up closing down here at 65.25, at the 65.25 area. So that's the story for yesterday. Yesterday was an indecisive day. It did test higher and it tested lower. It ended up within the IB. So it was a kind of an indecision day. Overnight, it opened and it immediately sold off. Here it is, finally hitting that 59.25 area. Broke through by a tick before finding a bid and pushing all the way back up to 67 to extend the range, the overnight range up. A retest at 66.50, missed by 2 ticks, and then we have the sell-off. This pop here was on the European PMI with some countries beating, and then the ensuing drop was the PMI with some the major components, major countries missing, Germany missing its PMI numbers, and so that caused a little drop and then a recovery. And then just now we broke down to 57.75, and we're rotating back to the mid. On the shape of the profile, it shows consensus generally in the middle. It's sort of a weird double distribution profile, but the value block is very, very big, which shows that the market kind of likes this area between 61 and 65 or so, 64.50, and is sitting right in the middle of it. I don't see a weak high. I don't see a weak low. Very, very little I can glean from this profile. The volume is strong, 252,000. Nice and steady. Sellers came in late, and it's recovering, and it's pushing through mid. So the sell side play may be weak. Still, we're going to, initially we're always going to look for the overnight stat. Which side of the overnight stat is going to be taken out? Is it the 67 or the 57.75? There's a high probability that one of those is going to be taken out. So I'm always fishing for which one is likely to break first. For a high probability play there, it's important to define your risk before you just step in blindly, buying or selling it, looking for it to break the overnight high or low on that statistic. So right now we're opening on the edge of yesterday's range, out of range. There's another 16 minutes left until the open. So not sure where it's likely to go here. This is another day. Of course, it's the first of the month, so we're expecting inflows or outflows right at the open today. So I'm going to step aside, wait for the 845 number, and see what happens. This is much like yesterday's action. Yesterday, if you note that even though we made a higher high and a higher low to Monday, we still have a lower value. So this is really important to track how value is moving. So value area lows, lower lows, lower highs, the point of control, lower highs. The market is actually is accepting value lower, even though the price action shows a higher high, higher low. Yesterday, I expected it to sell off at some point, and it did. After pushing through the high, it did give us a sell-off early, right within a tick of our primary target below at 62.50, this key LVN, and the launch point of this this rally on Monday. It gave us exactly what we expected here. But I'm going to tell you that today it is looking more like it's going to fall through on the selling. It'll likely fall through on the selling than the buying. Below 48 quarters, the key target for the selling. 48 quarter down to 47. 47 is the midpoint of this entire last run. So if we take the run from 91.75 to 2012.75, the mid of that run is that 47 area right here. So it's an interesting area to watch, but I'm looking at a higher probability of getting 48 quarter today than to push back up and through to 71.75 and up to the 80. I think lower is more likely today, but we'll see what happens. This is again, it's the beginning of the month, so I don't know what's sitting on the side and is getting ready to be committed now that the quarter end is here. Not sure what these funds will shuffle their money into next. So this is how things are laying out. The primary idea is that we open in range, in value, probably a quick test of 930 or 65 quarter. Quick test of 65 quarter and potentially breaking that overnight high at 67. But I expect that sellers will step in and rotate this down and through again the overnight low down towards 55.50 to break. 48 quarter, that puts us approximately 15 points, which is about what our range is, 15 to 17 points range on the downside. That puts us right into this area here, with 44.75 being a gap that's still open, and another high volume node where the market's likely to find some support. So that's the primary idea, is that we get responsive. Briefly, the yesterday's point of control is very close to the overnight high, so that puts the overnight high in as a target. And then I expect that sellers will step in and take this through. Note that this profile is a long liquidation profile. It is thin at the top, heavy at the bottom, a B shape, with a lower point of control over the last couple of days. So value is being accepted and sought, and accepted lower, and I expect the continuation of that down into the 48 quarter area. Remember, we have a poorly auctioned area here. If you look at this profile, let me extend this out to include yesterday. If you look at this profile, we have a pretty good balanced zone here that we started way back on the 19th. I've been talking about this micro composite for a long time. And what we have is a very thin area below, down into that 44.75 high volume node, and the gap from this day here. This area, these 4 days are poorly auctioned. They were done very quickly. A lot of there's a big gap in here that we've played with a little bit, but we're this area. I think this area down to 44.75 is ripe for a retest, and I think the market is poised to take action down there. If that doesn't happen, then the expectation is for it to chop around on the open, wait for the number in this former gap zone, find a bid, break the 67, and then our targets above will again be the 80, 83 quarter. I doubt we'll get to 87.50. That's 20 points away, but it's probably going to get stuck in yesterday's range on the upside. On the downside, there's a lot more opportunity for price discovery, for the market to activate buyers and bring that sidelined action into the market. So this is my primary expectation, is for the market to find sellers and drop to 48 quarter, 47, and then the extended target is going to be 44.75. That gives us exactly 17 points, which is the expected range on the downside, depending on where it puts the high in, if it doesn't push too far up. Okay, so that's what things are shaping up to look like. As always, don't just blindly follow the plan. Don't just blindly put your bets out there. Coming in with a bias is the primary step. The next and equally important step is to define what areas you can take a trade at with a defined risk, and would give you a better opportunity of getting a scale out or a target than a stop. That's the next step. And then once you execute, I suggest, in my experience, keep your hands off. It is it's very likely that folks will just interfere and micromanage a trade. And it's the most common complaint I hear is, I did all the homework, I did all the research, I had a plan, and then I put the trade on. It did not work right away. It looked like it was going to hit my stop. I got out for a scratch, or I lost 2 ticks, and then I watched the market turn around and go to my target. And if you haven't had that complaint, then you're pretty unique. But most traders that I've encountered who are looking to make the turn and do this consistently, that's a chief complaint, that, oh, it took out my stop and then it continued, or I took myself out and I watched it go to my targets. And that's the balance. That's the skill, and it's a skill that requires quite a bit of time to acquire, and a lot of commitment in front of your monitors watching the market. So once we have a bias, just find something to lean on. Look for an area that gives you an advantage on over your target, and just let the market do its thing once you enter. Once you enter, turn your head. I suggest you turn your head from the dome, assuming you've put your stop in. Turn your head from the dome. Do not look at the trading platform. Watch the chart as the trade unfolds, and then breathe. Just focus on breathing. Focus on being objective about what is happening. Do not interact with the market once the trade is on. That's my suggestion. Once you've honed that skill and feel strongly about the fact that you will take a stop, that you don't have a huge attachment to every trade, then you can start to increase the level of discretion on your account. Again, do what you want. These are my suggestions based on a lot of experience and a lot of interaction with various traders. Good luck, and I'll catch you tomorrow. Take care.